Good evening, everyone. Fred Shropshire here with WCNC Charlotte. I want to welcome all of the people on our Facebook page, on our web page, and on our YouTube channel who are tuning in for this special town hall that we have for you tonight. Bring it home. We're helping Black applicants overcome mortgage disparities. All of this born out of a series of stories that we've been covering. I want to first introduce the panel that we have with us this evening. We're joined by Aaron Barbie, who is the Senior Vice President, Program and Fund Development with Dream Key Partners. We have Dwight Crawford, who is a lender with New Res. We have Michael Horde, who is the head partner at Horde Law, and also joined by Dr. Melita Pope Mitchell, who is the interim dean over at the College of Professional Studies at Johnson C. Smith. And last but not least, my colleague, Nate Morbido, who's been doing some awesome reporting. Nate, I want to bring you into this conversation at this point because really you did a story, a series of stories. You had one this evening as well, where you're uncovering these numbers where Black applicants in the Charlotte area, we're finding out, have been denied 2 to 3 times more than their white counterparts when it comes to mortgage applications.
Yeah, so number one, not only are Black applicants denied at 2 to 3 times, higher rate at the largest lenders, most of the largest lenders in Charlotte, but that population overall is underserved when it comes to the number of mortgages, home loans originated. Just about 13% for a population that makes up almost 25% here in the Charlotte area. And so we've been really pushing this issue. The disparities are clear. The data is clear. There are disparities. Obviously, this is a nuanced issue. There are several layers to it. And what we wanted to do tonight is to provide solutions. And I will tell you, while we're giving solutions directly to people, the House Financial Services Committee next week on Wednesday will be meeting in Washington, D.C. to discuss this very problem: access to homes, access to loans. And we just want to offer people today some real solutions and opportunities and direct them to resources as the federal government begins to really take a hard look at this issue, which is now considered one of 2 top priorities for the agency that holds oversight over the mortgage industry. Now with the new administration in the White House, as Representative Alma Adams told me, who is on the House Financial Services Committee, we know that this is a problem and we are going to address it. And the NAACP here in Charlotte told us as well, the system needs to be revamped. And we're going to talk about that, and we're also going to offer some other solutions tonight.
Okay. Well, I want to start with Dr. Melita Pope, who is, as I said, a dean over at Johnson C. Smith. You actually deal with educating students on some of the challenges that people have had to overcome when it comes to obtaining a mortgage. I think you're on mute. You're muted.
Got it. Sorry. So I was saying that our college, the Metropolitan College of Professional Studies, houses our business and economics program, which is preparing students to go into specific fields that are going to address these disparities. So we have students who are going into finance, dealing with mortgage lending and things of that nature. And we're also super excited about our new partnership with Project Destined, which is allowing students to gain real life expertise in the real estate market. Our students are going into this with the possibility of earning a real estate license at the end of their coursework, and are actually participating in real life projects with other students across other institutions, as well as individuals who are currently working in this field.
And I think we have, we have Michael Horde here, who is actually, you deal with a lot of Black realtors. What are they seeing from clientele in the Charlotte area in terms of this issue that we're facing? And you're on mute too, sir.
I would have caught that. Okay, so thanks for that question. Great question. And I just wanted to say that I'm a part of a nonprofit here, Charlotte Crown Black Real Estate Association, where we focus on issues like this. But specifically, when I deal with realtors in closing transactions, I've noticed that the problem is not only education of the borrower or the populace, but it's also the activities of the lender that causes some of these disparities that we see. Specifically, loan officers should be educated about the process before they take somebody's application, before they pull their credit, which could damage them later. And some of that occurs quite a bit. And I've even heard crazy stories of how folks will see a name or hear a voice and then decide not to even pull credit and tell somebody they pull credit, but they didn't qualify. So you have a small portion that still is subject to discrimination. And that's something that needs to be taken up, and we need to challenge it and have a battle with that as well. Separately, the challenge is just education about credit, financial literacy, understanding what you need to actually get the loan done. And my organization, we work on that day in and day out, and I would hope that realtors would refer folks to these resources that they have to learn more about the process and what they can do and how they can improve their credit scores, as well as make sure the income is there to get into homes.
I wonder right now if we could get a quick lesson on credit. Like, what do we need to know about credit? What affects our credit rating? How long does this credit hang with us? What do we do to try to clean it up?
Great question. So if I could, a FICO score is what a lender uses to determine your credit worthiness. And a FICO score uses various elements to figure out the number that they will look at. One important thing is to remember that if you have a credit card, say, you don't want to use more than 1/3 of what you have on it. So if you have a credit card for $3,000, don't use any more than $1,000. And if you do, make sure you make the payments on time every month. And don't just pay the minimum, pay more than the minimum. That helps build your credit. There are different types of credit you also want to have, and not just credit cards, but credit cards. If you have an auto loan, that will help you, of course, getting your score up as well. And you want to keep the good credit. So don't close credit accounts if you have good credit history on them. If you close them and they have good credit history, there's no longer to be used for your score. And if you have collections, of course, make sure you take care of those. Call these companies, make negotiations, get them settled, and get them off of your credit report and give yourself time to heal. That's just a few tips for putting your credit up. I'm sure the other panelists would have other tips as well.
I'm wondering, is there a baseline in terms of the credit score? Because we hear terms of good credit, excellent credit, low credit. Is there a baseline that people should be thinking about before they consider buying a home?
So this is Erin. I'm happy to jump in on that one. So of course, there's a baseline, right? So at a minimum of 580, some lenders will work with a 580 in order to make it happen. Minimum 620, ideally 640. But your question was, should they have achieved this credit score prior to going down the home ownership path? And that answer isn't always yes. We know that some people will see their credit score and say, I can never own a home. What we ask is that people can be engaged in these education programs like we offer at Dream Key Partners in order to get the financial literacy they need to build their credit. So I hope that's not a barrier to people starting their journey.
Yeah. And you also, with your program too, you also help, it's not just people buying homes, but it's people staying in their homes too, being able to maintain mortgage payment, right?
Yeah, absolutely. So through the financial education that we offer, we want to make sure that people know how to stay in their home. Unfortunately, if people get to the point where they have to consider foreclosure, we want them to come and work with us. We do have a specific department who can help people prevent foreclosure. And right now, during COVID-19, we have seen that people are at risk of losing their homes. And so we offer financial literacy in partnership with our mortgage assistance program through the city of Charlotte. We want to make sure that people can stay in their homes through this hardship and make sure that they have the financial stability that they need to get through this.
I want to just back us up a little bit. Nate, you can jump in here, but we're having this conversation and we're offering, I hope at this point, people who are listening, some tangible help, because we're operating within a system really that has been hard for people to navigate. Right, Nate?
Yeah, I mean, there was a subcommittee hearing last week in Washington where much was talked about when it comes to technology, when it comes to automated underwriting, which is the president CEO of Community Link told me it's designed for a person like me. It's not designed for people like you, right? And you also have these kind of credit risk systems and interest rate, risk-based systems that are technology that have biases as well. And that's another part of this issue. And I also want to kind of push back too, because a lot is made about the need for financial literacy. And without a doubt, it's part of this, right? Fred, you were engaging with someone online earlier who, came from a position of, well, of course we need financial literacy because look where we came from. Look at the decisions we've had to make to be frugal, right? To try to learn how to use the money within the system that we're living in. And I think that in some ways it's easy to dismiss this as just a financial literacy problem, but it's not. It's systemic.
Yeah. When you say, and I wonder if I could get some of you on the panel to weigh in on this, because we're jumping in this in smack dab in the middle of we're in 2021, but clearly this is something that has history behind it. It's not a coincidence that there are these disparities. Who can speak to why these disparities exist in the first place? And that's to anyone on the panel who wants to jump in.
Fred, I'll jump in from the educational perspective. So when we think about the history of economic mobility, not just here in Charlotte, but in our nation, we're looking at individuals who have not been trained in specific areas. So I'm so excited about the work we're doing at Johnson C. Smith because we're preparing the next generation of students to go out and to work in these different industries. That's one way to try to combat some of the misinformation and some of the stereotyping that goes on when it comes to individuals being able to obtain mortgages and to purchase their own homes or purchase commercial real estate for their own businesses. It's really important for us to look at educating the community, not just from the financial literacy perspective, but actually training individuals who will go out and obtain the jobs in finances, obtain the jobs in real estate and things of that nature to be able to combat some of that.
That seems like such a significant step to me, to diversify kind of the industry, right?
Absolutely. And that's one thing that we're really pushing to do is to get our students and the community to understand the various opportunities that they have. When we think about real estate, we don't necessarily think about becoming a realtor. We don't think about, the underwriting and the lenders and everything that goes into the home buying process or the process of purchasing property for your businesses. So we're really excited about being able to train individuals and give them opportunities like through Project Destin that showcase things like real estate acquisitions and development management and financing properties to really educate individuals on all the aspects that it takes to get to that point where you're having keys put in your hand for your new property.
Fred, this might be a good time to bring Dwight in too, because Dwight's a lender. He's with New Res. When I was going through my 3-month-long investigation, I analyzed New Res's data, and their disparity rates are below the average for the market. About 8% of originations at New Res went to Black applicants in the Charlotte market. And, Dwight, you can really talk about it from a lending perspective. Like, what are lenders generally doing to try to combat this and reduce these disparities and eventually, hopefully, eliminate them?
Well, it's a great question. And there's a couple of different things. Right now, I'm on a team that from sales to operations, underwriting to senior management is just simply dedicated to trying to change the way that certain groups of people, or actually all people, who have the need for home ownership, who have never had those opportunities either through economics, through racism, through family, just they're the first people in their family to even think about changing that mindset. We're there to empower them, and we do it in a very simple way. As a lender, we're typically, when it comes to a borrower, we're looking at 3 basic components. We've talked about the credit, and there's also assets and their income. Well, we can't change anybody's income. The income is their income. We just need to find a home for that particular income. But as Attorney Horde mentioned, credit is not something that is stagnant. It's something that can be changed, it can be fixed, and it can be worked on. And I've been working in partnership with great organizations like DreamKey. I've been connected with DreamKey for, I don't know, close to 13 years, and been a part of what they've done from the asset perspective. Because really, down payment assistance is one of the strengths of the organization on top of the education. And what I've seen is that down payment assistance is an equalizer. What it does is it helps people to come up with the funds, because it's very difficult for a single mom to start putting away thousands of dollars just so that she can come up with a down payment or for closing costs. So it helps in a way that you could never imagine, because it equalizes. So we as a lender, what we're trying to do, and we've been dedicated to do, is to make sure that folks have access to money, not just from the lending perspective, but also from the basics of a down payment for closing costs. We have a credit enhancement department that will teach people what to do, because credit is one of those crazy things. And if you're looking at first-time home buyers, one of the problems we have is that there is a cycle of renting. And unfortunately, if you don't know and you're taking your information from your uncle or your mom or your dad who's never purchased a home, it makes it difficult. So we try to take out some of that misinformation and give them the direction that they need to be successful.
Dwight, I want to ask you a question that you mentioned to us offline here. It was a comment that you said, because I'm glancing at some of the comments, and I heard what you just said about there being these basic things like the income and the credit score and the debt to income ratio, all of those things. But you said something that was very interesting, and it's something that we have to account for in this discussion, and that's the discriminatory practices that we see, because that's where the problem happens. And you were saying that if someone sees money from a certain source, there might be an assumption with the home buyer. Can you speak more to that?
Absolutely. The topic that we're talking about is discrimination in lending, but sometimes the discrimination starts way before a file comes to our desk. And my specialty is I layer down payment assistance, meaning that I will use money from the city, I will use money from the state, I'll use money from private sources to give clients literally tens of thousands of dollars. But in the state of North Carolina, on our offer to purchase contract, it's required for someone to disclose that to a potential seller. So before they even get a chance to get into the game, just because of the source of their funds, where their offers are not even being looked at. And I don't believe that it's coming from the perspective of a home buyer, or excuse me, a home seller. They don't know the difference between a down payment assistance or not. This is something that needs to be dealt with from the real estate professional perspective, because I do a lot of business with listing agents, and I do a lot of business with selling agents. And they're there simply to do one thing, to move that house, to get people into their homes. So they're looking to protect, or what they believe to be protecting, their client. The problem is in that protection, there's also discrimination. And it's been part of the real estate world from the beginning of this country, and the only way that we can change that is if we remove that from the contract. It should be removed. It's because you might as well say, well, hi, I'm a poor white person, or I'm a poor black person. You can't put that on a contract. So why would you put that on a contract to show, hey, yes, I'm low to moderate income, because the majority of my clients are single black women, and they're trying to use this money, and they can't. They're not even getting their offers accepted.
And that's a General Assembly issue, right? That's something that the state law needs to change.
If I could, so the contracts are actually recommended contracts by the state Realtor Association, and they're prepared by attorneys, and then the realtors are told to use them. And within our organization, I've advised realtors that if an attorney, first off, realtors cannot practice law. So preparation of a contract is practice of law. If an attorney prepares a contract that they can then use, we can obviate that issue. We've had discussions about going to the National Association of Realtors as well as the North Carolina Association of Realtors and the local Realtor Association and pushing back. And I think there's a large group that's interested in removing this from the contracts. But most realtors are going to take the contracts that are recommended and use them. And that's what's occurring. But those are not mandatory. They can use altered contracts. Different contracts are used at all times.
What struck me so much as I was kind of looking into the disparities here in Charlotte were the resources that are available to help with down payments, to help with closing costs, to try and help reduce interest rates. Some of the lenders are doing that. Obviously, DreamKey, Aaron, you all are involved with that. Do you want to talk a little bit about some of the money that's actually available to help? If you can overcome the whole issue of the fact that your source of income may be a problem for the selling realtor, the money's there.
Yeah, you're absolutely right. The money is there. So we are excited to partner with the City of Charlotte to offer the House Charlotte program. And that's a down payment assistance program that has many facets to it based off of what your need is. So specifically, we target and work with families who are at 80% of area median income. And what that means is that you would need to be, for a family of four, around $66,800 for your annual income. And just because of that, you could get $10,000 of down payment assistance through this program. We also have programs that are specific to those who are public service employees. So if you work for the City of Charlotte, Mecklenburg County CATS, or the CMS school system, you also can get access to specific down payment assistance in the amount of $10,000. One of the great things that's come forward, especially since COVID-19, is a program called the Community Heroes Program. And that is for our families that have people who are essential workers, who are in law enforcement, firefighters, first responders. And there's an opportunity for you to get up to $22,000 of down payment assistance. And these are tangible, actual programs that people can participate in right now.
How do we find those, Aaron?
Yeah, you can go to our website at dreamkeypartners.org and you can look under the programs department and you can see all of the offerings for the down payment assistance that we have and our education. I did want to enter one thing into the conversation that we haven't talked about yet. We talked about financial literacy. We talked about funds that you can get your hands on, but we haven't talked about as counselors. So through our organization, we have someone that wants to join your journey. We've had people in our program 2, 3, and 4 years with the same counselor who is helping to advise them on their journey to home ownership. And it is so rewarding to see that person get the keys in hand. But what that counselor does is help you to get through crisis, is a sounding board for you to reduce your debt to income ratio, is a sounding board for should I take on this credit or not. We think that is very important to the success of obtaining a home, is making sure you have someone that you can just bend their ear about your finances.
Yeah,
that's a great point. I interviewed a woman who was denied her initial home loan, her mortgage. She was denied because of her debt to income and her credit. And if that were me, I could have easily given up at that point, right?
Absolutely.
She had the drive, number one, but she also had someone there guiding her to kind of let her know that we can get over this hump. And I think that's so critical. How soon in the process do you need to connect with someone like that, a counselor?
Yeah, absolutely. So we ask that you would attend our courses so that you can get the foundational education that you need in order to be successful, meaning going through your credit report, having the opportunity to understand your money mindset. And once you've completed that, and that course is 2 to 3 weeks, depending on what series you're in, then you have access to that counselor that will join you for 2 to 5 years. So almost immediately.
Yeah, and I want to jump in here and just remind our audience who's listening in on this conversation, you have a panel of obviously very well-versed experts here to take advantage of. If you want to ask some constructive questions, that's what we're here for. I want to ask Michael Horde here a question, or actually all of the panel I can ask, because you guys are pretty tapped into your industry and you're also tapped into this issue nationally. How does this look? How does the Charlotte area look compared to other markets? Obviously, the disparities are a problem nationwide, but are we any more empowered, less empowered, or equivalent to other areas? How do we compare?
So if I can comment on that, and before we talk about the historical context, I think we kind of need to educate people about why there is a difference sometimes too, because folks think that everything is even. There's a level playing field, which there is no level playing field. There was a wrong that was done that has not been corrected. But aside from that, Charlotte is unique in that the growth is phenomenal. And what's happening is you're having growth stimulated by out of the city and out of the state players. And because of that, prices are increasing. And a huge problem for our clientele is affordability. The affordability of housing is a huge issue for the city of Charlotte. I'm just not sure, and I don't have great hopes about what's going to happen in the city regarding affordability in the future. There are ways to combat it, and we do our work. All of the folks on the panel do our work to try to combat that. But the hope is waning in terms of keeping it affordable here, or making sure affordable housing units are available. That's one piece to it. Another piece is that Charlotte is a great place to be in. People are moving here in droves. And I think that we need to be at the forefront of arguing for a higher minimum wage. So when folks' income level, we talked about income as a factor, and that's income as a factor as well. If we don't raise minimum wage, we'll have a situation where you have extremes. You have very few haves and a whole bunch of have-nots. And that's going to cause the destruction of our country if we don't get a handle on it. Greed is something that we have to take care of. I'm sorry, let me get off the soapbox.
Do you guys think, I want to throw this out there because you brought it up in terms of affordable housing, and this is kind of a current event question, you know, with the city looking at possibly putting in duplexes and triplexes in certain single family home zoning areas. What are your thoughts on a move like that in a city like Charlotte? Is it effective? Could it be?
So I can speak to that just a little bit. I am certainly not on the development side of Dream Key Partners, but I do see how there is a great benefit to having mixed opportunities for housing within neighborhoods. So what we see is that not everyone can afford a single family home at the price point that we just talked about, right? These homes are $400,000 at a time. But there may be a possibility for someone to be able to purchase a condo or a townhome and enter at a lower price point that would be more amenable for them to be affordable. And so there's great support from our organization in diversifying the types of housing that's available. And I know it's a hot topic in Charlotte right now, but we have to consider, how do we get more people access to homes so that they have housing stability and build generational wealth? We have to do that through diversifying.
Yeah, and one of the things that I'm sorry, Nate.
No, go ahead, Dwight.
One of the things that's been one of those bees in my bonnet is that when we discuss affordable housing, it's a percentage of what a developer is building, and it's typically going to be rentals. And I've seen a lot of that, and the problem is it does not help to build that generational wealth. It continues to perpetuate the cycle. I will say this also, and I'm sorry to keep on harping on Dream Key, but they've built amazing homes, they've built amazing neighborhoods, and then they were able to come in with federal funds, state funds, and local funds to help people to purchase those homes. There's a lot of different organizations that are revitalizing historically Black neighborhoods, that are putting the money back in there to try to keep the folks that have been there in there. But we need more of those. But the problem, of course, is space. So go back to your original question. Maybe the idea of building up is not a bad thing. Because we're not a real multifamily home type of city, you know. But if you go to more of the larger metropolitan cities, you've got mixed-use properties with homes above them, that people can own and build that kind of generational wealth that we're discussing. So it's not a bad idea. It's just finding the space, because we're limited geographically. We only have a certain amount of square footage here in Charlotte. So the only other alternative is to build up.
Nate, were you going to jump in with something?
I was
earlier?
just going to say, the city of Charlotte's looking at other cities that have done this. We've reported on, in Minneapolis has looked at this, and with all of these issues, something that struck me in my reporting is that we have systems that are meant to be equal, right? They're meant to be race blind, including the mortgage lending industry. But the truth is, it's an equal system for people who are not equal, who have unequal circumstances, right? As much as we want everyone to be equal, what you're comparing apples to oranges. And I think what happens here, particularly when you're looking for affordable housing, and I think a commenter said as much, I mean, you're basing affordability on white wealth and what the average person in Charlotte can afford. And that's a different profile, quite honestly.
Yeah. We got a question here that I want to pose out to anyone on the panel who can answer this. When people are putting in their applications, their loan applications, do they ask for race information? Is that data captured? What happens to that data? How is it used?
I think I could speak to that. Yes, it is not a requirement for any mortgage application. It's something that we and all lenders throughout the entire country request or ask for. It's called HMDA data. And the purpose of this data is not to discriminate against the buyers. What it is, it's supposed to create a checks and balances to make sure that we, the lenders, are being responsible and that we are lending to everyone blindly, not financially blind, but racially blind. So it is asked for, and whoever, if you do not want to volunteer that information, you do not have to volunteer that information.
I wonder, obviously the crux of getting a loan is your ability to repay that mortgage. That's
Yes.
the critical piece, right? When we talk to some advocates who say that there needs to be more sensitive underwriting. You have to consider how a person of color's background is different from a person like myself's background. And maybe you should look at how they paid their rent instead of looking at their, credit history from years prior or whatever it may be. Is that a possible solution to try to slowly overcome this?
Lending in general is always going to be risk-based. And we are trying to mitigate loss. That's just the basic whole idea. What you're talking about is really more of, I think it's a training that's necessary that every occupation should be doing. It's not just a lending thing. It should be that everybody should be a little bit more tolerant and understanding of other people's cultures and backgrounds. Can we throw that into a risk profile? I really don't know. It would be great if we found a way of doing it, but it would, once again, it would have to be equal for everyone. So because one family did something one way and another family didn't do it that way, how do we make a decision? And the only way that we can do it is by making it across the board a specific guideline. But we do have, there are people behind this on both sides. Underwriters do understand, and we do accept letters of explanation on certain circumstances, and we do take those into account. We do have an automated underwriting system, but we also have people that make these decisions behind that.
Reverend Corinne Mack, the president of the NAACP here in Charlotte, told me something that I just thought it just made so much sense. The way lenders see people of color is the way they treat people of color. That's the way that it affects that. And she really believes that conversations like this, training help, because you have to look at this through a different lens. And if anything, this last year should have taught us that, right? We need to look at this through a different lens, a lens that things are different. And in order to overcome these disparities and to help people get into home ownership, we have to look at it differently. And we have to, all of us, particularly people like me, need to take a hard look at the way we look at other people. Because even if we don't mean to do a certain way, our behavior, the way we grew up, whatever, may affect that. And I think that that's part of this too. When you're trying to help somebody with a loan, although most of it is over a computer, right? You still have some interactions. And the way that someone sees another person affects the way they treat that other person.
If I could comment, I'm going to hold Dwight's feet to the fire a bit. So the folks are able to put their racial data onto the applications, but everything has been eviscerated. If you talk about the Fair Housing Act, if you talk about Dodd-Frank, everything's been eviscerated. So the lenders right now are functioning without somebody watching them. They're able to have these disparities and not get checked on it because the government is not requiring racial data to be fed to it when it's doing this analysis. If you talk about the OCC, if you talk about the Fed, they're not requiring that. They're only looking at the income levels, not the racial data that comes in. And so when we're tracking, we're looking at census data or other data that's collected by governmental agencies outside of regulatory agencies. And that's something that needs to change. We definitely need to track that. And one of these things with debt to income ratio, I'm not gonna take up too much time, that needs to be changed is, well, I wanna back up. I wanna make people understand that if you think about it, we're a few generations out of slavery. And because of that, our education, our college education had to be paid for with loans. Student loans are a heavy weight on the neck of someone trying to get a house. And because of that, lenders will count student loans towards your DTI, which could disqualify you automatically. There's no other factors that they would consider if your DTI is not there. So we need to keep in mind that these things keep us down. Whereas I've heard stories from some of my white friends where their parents gave them down payment assistance. You know, I didn't have that. My mother was in a single family home in Chicago, so I had to get student loans. And because of that, it took me time to be able to afford a home, time to work hard, and then be able to get there. So I just wanted to make that clear.
I wanted to jump in just on one point about the regulation, because I think it's really important. This is an important distinction, particularly for banks. So the federal government does what are called Community Reinvestment Act performance evaluations every few years or so on banks, and they strictly are looking at income. They're not looking at race. To Michael's point, they're basically rating the way a bank meets the services and credit needs of a community based on those incomes, not based on race. And also private mortgage companies, credit unions don't have to play that game as well. So there's been a cry for more regulation as well. And for regulators to reward the lenders that are really trying hard and hold their feet to the fire to those that aren't trying as hard. Fred, I wonder if this might be a good time to ask some of the questions that some of our viewers sent in as well.
Yeah, I'm trying to think of the question. Someone was just saying, earlier, like you said, I was going back and forth with a viewer or with someone on the Facebook page who was just saying that, isn't it this? And this was the question. It was a statement. Isn't it racist to require all of these requirements, all of these things that people have to do to be eligible for this and that? Whether it's the loan or the literacy classes or whatever it is, to require those things, because there seems to be a concept of deservedness that exists within this system. I understand that all of this is systemic and this is the way it works, but I just want to get the panel's view on this. This is something I've heard from, or I've seen, actually, I've read from a couple of the folks who I've interacted with online.
So this is Erin. Can I push back just a moment for some clarity on this? Because I want to make sure we're answering it properly. Sure. Is this person saying that there shouldn't be requirements of financial literacy or education in order to have access to down payment assistance? Is that what I'm hearing? Well,
I to be honest, don't know the answer to your question. I mean, we could make that assumption. But I guess it's the idea that there's so many requirements, so many contingencies that exist that don't exist elsewhere.
Yeah, so I can speak to the down payment assistance that we offer at Dream Key Partners and why we have the expectation that someone would go through the financial literacy and empowerment program. Our goal here is to create the best home buyer possible, and just providing the funds for the ability to pay your down payment assistance is simply just a band-aid to the larger issue, which is making people financially stable for a long time and being able to maintain your home. There's much more to it as far as a requirement than just getting access to the money, even though that is the end goal. So we believe we're building better home buyers that will pass that information on to their next generation, because we're not having enough conversations with the next generation about about why homeownership is important. Our goal is to ensure that we've planted that seed and that it flourishes and grows from generation to generation.
Yeah. Anyone else want to tackle that question before we move?
Yep. One other thing that that does is, if you look at the data on that home buyer education, the folks throughout the entire country who go through a home buyer education program also have less rates of foreclosure than their counterparts who have not gone through it. Down payment assistance is not it's not a privilege. It's something that a lot of folks work really hard to get through. There's an educational component, there's a credit component, there's a lot of different things that go through it in order to get that money. So I don't know how that would be considered to be, well, it's not some sort of an extension of some sort of welfare program. It is something that people work really hard to get. And I don't know of any down payment assistance program that doesn't have a financial education component to it, because there's a lot of these organizations that do things similar, and on one end of the hall, you have the home buyer education, but down the hall is the foreclosure prevention. Mm-hmm. And the idea is to put the foreclosure prevention people out of business, so that they don't have to deal with the amount of foreclosures that our community has seen. So I don't know. I think it's important to have that educational component, because it really sets people up for success.
Dr. Mitchell, can I ask you, just when it comes to the education component, I mean, when you all formed your partnership, I mean, how long down the road do you expect to see impacts? Obviously, the first graduates that go through these programs are going to hopefully get into the field and hopefully make a difference. But I mean, when you're looking at the long-term plan for making an impact through your program, how long are we talking to see a difference?
Absolutely. Well, Nate, I'll be honest with you. We're hoping to see an immediate impact. We have students in this in the course right now who will be graduating within the next year, who will then be able to sit for their licensure and go immediately into their career in real estate. So this is right now that we can make a difference in changing what the landscape looks like for these students. So in terms of, educational opportunities, one thing that I wanted to talk about here that Dwight and Aaron brought up is this piece about educating individuals about the processes, whether it's educating them on financial literacy, talking about, avoiding foreclosure. It's important to be able to partner. And Johnson C. Smith University is very interested in partnering with organizations to make sure that our community, and especially the West Charlotte community where we're housed, understands what resources are there and available to them. So not only is our goal to educate students who will then graduate and go out and work in these fields and make a difference in their economic mobility, it's also to be able to bring resources and partner with our community to make sure that they understand what's available for them and how we can continue to strengthen that community there. We see a lot of, and I'll say it, we see a lot of gentrification going on around Johnson C. Smith University. I've worked there since 2006, and we're definitely seeing the neighborhood change. I'm looking at houses that are now selling for $1.2 million. So how do we make sure that the community who was there, the community who's been there for generations, also realize that there are resources available to help them keep their homes, to help them restore their homes and things of that nature. Councilman Malcolm Graham was talking on a call that I was on the other day about the opportunities that the city has to give loans to individuals to help them rebuild or restore their homes as well. So it's very important for us as a community, not just Johnson C. Smith, but as a Charlotte community, to make sure that we get this information to the communities that need it most.
Mm-hmm. We've had several comments. I want to highlight one of them. Brad C., who says Black's total net wealth will be zero by 2050, but has been expedited because of COVID-19. With that statement, what kind of policies do you think can happen or should happen to start to work to reverse that trend? And anyone in the panel can answer that.
I'll jump in. So first off, there was a wealth gap between blacks and whites prior to COVID-19 hitting. And my prayers up to anybody who's lost family members or friends because of COVID-19. But there was a gap before that. And when it hit, there's a phenomenon that happens when jobs start laying off folks in the order in which they lay off people. Sadly, a lot of black people are some of the first people to go. A lot of black people are the frontline essential workers as well, who are staying there and trying to work and do things and can succumb to the disease as well. So our income is being impacted by that, because when you lose a job, you can't get a house. And you have to depend on others to give you a job to employ you, so forth and so on. And they're not doing it because of your race. And that's going to impact your wealth. What we teach at Charlotte Crown Black Real Estate Association is that the key to wealth is home ownership. That's where you start. Anybody who is wealthy, they started with home ownership. And when that's taken away, that slows the wealth. It takes away from what you would consider when you're calculating your assets and your wealth as well. So because of that, there are about 14 policy changes we recommend on our national level with our national organization. And one crucial one, I think, is the, first off, minimum wage. The DTI needs to be reformed, or needs to go. Student loans and how they're counted need to be reformed and how they're counted. And when folks get back up on their feet, then they can utilize these policies and these changes to go ahead and be able to own a home and then create that wealth that they need to create and try to level, again, the playing field.
And I will say that a recent study found that the black-white homeownership gap reached its 50-year high in 2018. I mean, just think about that. And then a pandemic hits.
Yeah.
You know, we had a couple questions from a woman named Miss G who emailed us earlier today that I wonder if we can pull up on screen, because I thought they were both really good questions directly for a person who's seeking those answers. Fred, do you want to take it from here?
Yeah, so she says, first question, would banks or credit unions be more amenable to loaning money for land only?
Well, I guess I can answer that. Well, I'll put it to you this way. Yes, a lot of banks do lend on land. But going back to that risk model that we've learned this, a very important lesson from the 2008-2009 crash, that when the first thing, if there's a major financial issue, you're going to protect the roof over your head. And if you've got a piece of dirt, in a sense, that you're making payments on, and things go a little bit sideways, you're going to stop paying on those first. So the problem is that a lot of banks have tried to mitigate that risk by not lending on vacant land. There's still a lot of banks that do. And if you find one, they normally specialize in them. Not too many credit unions do them, unless they're specialty credit unions. But the money is still out there for that land. The problem is finding it, because everybody's buying it.
All right, I think that we got to. I think Aaron, you said you wanted to weigh in to talk about the mortgage assistance program again, to point out how these programs are underutilized. They're out there, but not enough people are using them, right?
Yeah, absolutely. So we know that through the new current stimulus funds, it's been a focus on renters. I get that. And through our program opening up on February 9th, we've seen a lot of engagement from renters. And I want to give you some specific numbers. We've received over 5,000 applications for assistance with rent, but our mortgage assistance program opened on the very same day, and we've only received under 300 applications. And that's staggering for us, because we know that the need is out there, and we know that people need access to the funds. We're able to take care of arrears, as well as being able to help pay forward through these programs. And they can find out more about it on the RAMP CLT site. That's www.rampclt.com. We encourage people to please utilize these funds before they run out in September 2021.
Aaron, can I ask you, how much money do you have available? How many people can you help? Because I know the rental assistance program initially closed with plenty of people still waiting for help before you reopened it in February. How much money is out there to help people with their mortgages?
Well, here's what's interesting. The new stimulus package did not include mortgage assistance, and we were very disappointed in that, and we're pushing legislation to have that included going forward. The city of Charlotte put some dollars aside specifically in case this happened in the amount of $2.5 million in order to assist families with mortgage assistance. Now, we haven't even put a sliver in that 2.5 million, and we're hoping that by the time that those funds are exhausted, we have some mortgage assistance funds coming forward through the government.
And what are the requirements for needing that money? Like if I were to apply, what kind of requirements do I need to hit?
Yeah, absolutely. So again, we're targeting that 80% AMI. So that family who's making $66,000 or less, you've got to live in Mecklenburg County. And the key is that they have to have experienced a COVID hardship. So what that means is they've had a loss in their wages, they've had a job loss, they've experienced an illness as a result of COVID, or they've had challenges with childcare because of COVID. And also they can't be in a loss mitigation program like forbearance or repayment. We understand that that group is getting help, and we want to help everyone else. And lastly, it has to be their primary residence.
I got a comment over here. It was originally in reference to the discussion about land and financing land, but Mackenzie Duchess Duvall, she said most lenders want 20% down. I know that those figures have kind of vacillated over the years. What's a common down payment that we're talking for home buyers?
Well, depending on the program, you can put for a conventional loan, a loan that's insured by Fannie Mae or Freddie Mac. They have programs that you can put down as little as 3%. FHA will allow for 3.5%. If you're looking to purchase something in a little bit more rural area, you could do 100% financing with USDA. And if you're a veteran, you can also do 100% financing. So that 20% rule hasn't been a thing for quite some time.
Yeah.
It's a good thing to do because obviously the larger your down payment, the smaller your monthly payment. So when life does come at you, it's not as challenging. But unfortunately, we're living in a market where the average home is, in the $300,000 world. Not too many people have that 20% to put down. So there's alternatives.
Yeah.
I know Ms. G had another question as well, and I wanted to see if we could put that one up on the screen. She initially asked about the land, but what is recommended if creditors aren't honoring the temporary moratorium on late payment reporting to credit bureaus? Obviously, this is pandemic related. What can she do, when it comes to, this issue may be impacting your credit?
If I could, what you want to do is you want to go to the Consumer Financial Protection Bureau. You go right online at cfpb.gov, and you can file a complaint. And when you file the complaint, make sure you identify the creditor as well as the credit reporting agency. That usually gets quick results. Folks don't like to have the government in their business. So once they see that, if they've done something incorrectly, usually they'll correct it right away. So just keep that in mind.
I think as we prepare to kind of close up, I wonder if anyone has closing thoughts about, this is obviously a lofty problem. There are some really hyper-local solutions available. If you were to say one thing to the people that are watching this right now or will watch it down the road, what would it be? Maybe we can go down through everyone.
Yeah, I'm happy to start with that. I love that our organization name is Dream Key Partners because it does start with a dream. And what I would love for people who are watching to know is that your dream can become a reality. And there may be hurdles, it might be difficult, but we can join your journey and make sure it happens. I would love for people to remove from their mind that it's not for them because homeownership is for you. Just work with one of the great people that are on this panel today and we will help you get there.
I'll feel free to join in now as well. Just like Erin says, home ownership is a possibility for everyone, and there are definitely resources in the community that are here to help support you. Just as education is also for everyone, we hope that, you know, through our partnership with the various organizations throughout Charlotte and Project Destin, we'll be able to bring opportunities to underrepresented groups so that they can be seen in the real estate arena as well. So we look forward to continuing the conversation and to building a stronger community here in Charlotte at Johnson C. Smith University.
Dwight or Mike?
Sure, I'll jump in. I've heard the word declined or denied a lot of times tonight through different topics. And I think that it's really important to find somebody that can build a team through homebuyer education, through down payment assistance, or even if you don't need down payment assistance, just there for your needs. And if there is a problem, that the answer to the problem is not no, it's not denied. It's going to be something that's more like, not now, but here's what needs to be done. Because that word denied, the declination, it deflates people's dreams. It's a dream killer. So if I can, as a takeaway to anything, I think that if you have just the slightest inkling about purchasing a home, reach out to somebody and try to make that make that dream come alive. Last thing I'd like to say is that I've mentioned down payment assistance, but I'd like to put it into a context because like Erin's program, they do $10,000. There's North Carolina Housing will do an additional $8,000. There's a program also that if you're buying new construction that you can also obtain $30,000 and you can combine all of that. That's $48,000 for down payment assistance. Now we were talking about that 20% thing. You've got $48,000. You could pretty much get your 20% down. Make your payment smaller. The goal should be just two things: how to get into a home with the least amount of expense and the lowest possible payment. That's where the key is, not just getting into the home, but staying in your home. And that's really where the talent lies.
That's true. So I'd echo everything everyone has said. The goal is attainable. All you have to do is do your homework, be steadfast, and move forward with it. I would advise you to, when you apply for a loan, make sure it's somebody that you can trust, because sometimes if you go to someone, they may tell you, oh, you're denied, sorry, there's nothing we can do for you. And you have those who will tell you, look, before we even get there, you need to work on X, Y, and Z before you can get into this home. Go work on that. Here's some resources. Go to this organization, go to that organization, and get ready to get into it. So just make sure you do your homework and know who you are in terms of your credit profile, your assets, what you can afford, where you want to be. And when you have all of that in hand, just make sure you get somebody that you can trust to get you to where you want to go. That's all I have.
Is there one pitfall that you see that when someone fills out an application, that one thing to avoid?
That's a great question. I don't think there's anything to avoid. Dwight, you can speak to that, but I don't think there's anything to avoid, because you have to be honest on it, right? So you have to disclose everything. But in advance, I'll give you an example. I had a situation where I was getting a refinance, and I told my loan officer up front, tell me exactly what I need to do. I have assets, I can pay this off if I need to. Let me know up front before we get down the road and an underwriter sees it, who you have no control over. And it's their world at that point. They can deny it. They can do something arbitrary. They had me produce a settlement statement from 20 years ago. That's unheard of. I had to write like 30 letters of explanation, unheard of. So you definitely want to make sure that you know what you're getting into up front and correct those things before you even put it on the loan application. Because once you get to that point, there's no turning back.
We have a ton of resources on WCNC.com for people to just search the keyword money. Tons of resources, including in these stories. There's other local community agencies that are just dying to help people overcome these challenges.
Yeah, and on that note, I'll close with just saying I like this comment from Emily. Pretty Mama Smith is the name, where she says, delayed, not denied. I think that's one of the big takeaways from this discussion, is that, you know, there's work that can be done to put yourself in a position to be a homeowner. As you said earlier, denial does not mean is not the final word on this endeavor for a household. I want to thank all of you on our panel, Dr. Mitchell, Michael Ford, and Aaron, and of course our Nathan Morbido doing some awesome reporting as always. Thank you so much, and thank you all out there who've been asking great questions and paying attention. And I'll just reiterate, as Nate said, we have all of the resources on our website, wcnc.com/money. You'll find a list with the bios of all of the folks in our panel, and you'll find all of the stories that we've done on this issue. Thank you guys so much. We really appreciate it, and I hope all the folks out there have learned something.